welcome to this podcast. I am your host Amit Kirti. In this podcast, I will review the book Ujjivan, Transforming with Technology. Microfinance has brought about a remarkable change in the lives of millions of rural and urban poor. By lending few thousands of rupees to meet the credit demands of these people, microfinance companies have bridged a major gap and brought the poor and credit unworthy people to the mainstream. There are many NBFCs and MFIs that have come up over the past decade, the two most promising ones being Ujjivan and Bandhan. This book talks about the former. History of Microfinance. The genesis of microfinance is attributed to Muhammad Yunus. In the late 70s, Muhammad Yunus, who was at the University of Chicago, returned back to Bangladesh only to find his country reeling under poverty. He found out that the lack of credit was a major cause leading to poverty. He started the concept of microfinance by lending small amounts to the women who weave baskets. This idea turned out to be a success, and the government of Bangladesh institutionalized it and started Grameen Bank. In India, public sector banks used to lend in a big way in rural India. However, they faced a lot of issues due to defaults in repayments. This led to the curtailment of loans to marginal people. This led to organizations collectively called self-help groups step in and act as intermediaries between banks and borrowers. There were three major self-help groups or NGOs that pioneered this concept: Seva, Mairada, and Pradhan. They were supported by NABARD. In the late 90s, Small Industries Development Bank of India, or SIDBI, launched a new program. Under this program, few MFIs grew into bigger organizations. Some of the known ones being SKS Microfinance, now called Bharat Microfinance, and Bandhan. At the dawn of the new millennium, few new NBFC MFIs emerged. Among them was Ujjivan, which concentrated mostly on urban poor. Birth of Ujjivan. Samit Ghosh, who got an MBA degree from Wharton and worked as a banker for close to 30 years, decided to work for the poor people. He read different books on microfinance and visited office of customer meetings of some of the microfinance institutions to get a first-hand experience of microfinance industry. He attended a workshop organized by Grameen Bank, which gave him further insights into microfinance and taught him the process of starting an MFI. All the learning from these experiences led him to focus on two things: A, to serve the urban poor using microfinance, and B, use technology as an integral part of lending. Thus, the idea of Ujjivan was laid. Now, in order to get the company going, there were four things that Ujjivan needed: A, initial capital; B, office space; C, a team; and D, target customers. The initial capital of close to 2.5 crores for Ujjivan came from Samit himself, his close friends, and from Bellwether Microfinance Fund. The office space kept shifting from a guest house to Emphasis building and then back to a flat of Indiranagar and finally to the current location in Koramangala in Bangalore. Now, the initial employees were hired from Ghosh's circle of friends from banks. Couple of people came in from Grameen Bank to aid in setting up the structure. In order to identify the customer base, Ujjivan did a study in collaboration with Delphi Research Services in the year 2005. The study led them to their target customers, that is, urban poor women. With all these things in place, the company approached the RBI for NBFC license and they got the license in less than 50 days. In 2006, Ujjivan started its operations and launched a pilot scheme in Bangalore. At the end of the trial period, Ujjivan learned the following. Its customer base was women in the age group of 18 to 55 years who had a monthly income of 4,000 to 6,000 rupees and had expenses in the range of 2,000 to 4,000 on items like food, housing, and medical expenses. Nearly half of these women were salaried and working as housemaids, teachers, sweepers, etc. Another 40% were self-employed and were selling fruits and vegetables, working as tailors in petty shops, etc. Ujjivan started to give loans to these women. The loan amount was in the range of 6,000 to 12,000 rupees at an interest rate of about 25% for a tenure of 12 to 24 months. Ujjivan charged an upfront fee and enforced a life insurance policy on each borrower to hedge against their death. During the initial phase, Ujjivan managed to obtain foreign direct investment from Unitas and from Michael and Suzanne Dell Foundation. During the period, the company moved to its office in Koramangala. Growth of Ujjivan. After the pilot phase that ended in April of 2007, Ujjivan embarked on a very high growth path, which led to a multifold increases in the branches, customer base, as well as employee strength. By 2008, Ujjivan introduced individual business loans, education loans for kids, and housing loans as well. The company mandated that all borrowers should be covered by life insurance. Andhra crisis. The crisis in Andhra Pradesh marked a major turning point for microfinance industry. The Andhra crisis started in the early part of 2010. The news channels started airing the stories of people committing suicide as they were not able to repay their loans. Some women even complained that they were being forced to go into prostitution in order to repay the loans. The Andhra Pradesh government issued an ordinance that came into effect on 15th of October 2010, which restricted microfinance operations. RBI came up with a committee to address this issue. By December 2010, the committee submitted a report and recommended that NBFC MFIs were allowed to charge interest rate only up to 24%. The loan ceiling was set to at 25,000. The loans did not need a collateral and no prepayment charges were to be levied. These guidelines paved the way for a structured and formal approach to MFI lending process. Post the crisis, Ujjivan took many prudent measures like cutting the number of branches, reduce the lending rate, reduce new customer acquisition rate, and merge nearby branches. All these steps led to a reduction in its operational expenses. Ujjivan did two important things which helped it tide over the situation. First, it took a humane approach and increased the repayment window so that people under stress would repay back with some flexibility. Second, the company set up branch wise action plans to handle the situation differently at branch level. Special collection teams were set up in branches where delinquencies were higher. These steps helped the company to tide over the crisis. Back to growth path. Between 2012 to 2016, the company returned back to the high growth path. During the second phase of rapid expansion, the loan book grew at a CAGR of about 66%. Number of customers grew from 1 million to 3.3 million. Revenue grew at the rate of 60%. Technology. Ujjivan introduced document management systems to speed up the loan processing process. The company also introduced a system called R2 that works with handheld devices, which was used for customer acquisition. Ujjivan uses the Finacle software for its core banking solution and Sun Solaris supercluster from Oracle for the backend operations. The field staff uses tablets for customer acquisition, servicing, and loan management. Risks. Microfinance is filled with multiple risks: incompetent or unethical employees, dishonest customers, opening branches in high risk areas are some of the risks that the company faces. Small Finance Bank. On 16 December 2015, Ujjivan got in principle approval to operate as a small finance bank. As a bank, Ujjivan could now take deposits, which are low cost source of funds. Moreover, by being a bank, it gets legitimacy and is not subject to whims and fancies of local leaders who instigate people to default all their loans given by MFIs. Being a bank comes up with its own complexities though. Ujjivan has to adhere to regular banking norms like CRR, SLR, etc. Additionally, it has to adhere to small finance bank specific guidelines like 75% of their lending has to be in the priority sector, or 50% of the loans have to have a ticket size of less than 5 lakhs, or 25% of the branches have to be in the unbanked areas. Also, as a bank, it was mandated to reduce the foreign shareholding to 49%. Now, in case of Ujjivan, 90% of its shareholding was with foreign investors. In order to satisfy the foreign shareholding criteria, Ujjivan decided to file for an IPO. In May of 2016, Ujjivan raised 882 crores via the IPO route, which was subscribed or rather oversubscribed 41 times. The anchor investors subscribed for 265 crores and included big names like ICICI Prudential Mutual Fund, Tata Mutual Fund, Birla Sun Life Mutual Fund, Sundaram Mutual Fund, etc. The company got listed on the stock exchange on 10th of May 2016. Demonetization. On 8th of November 2017, government announced demonetization of 500 and 1000 rupee notes. This hit the microfinance industry in a big way. Ujjivan was not immune to the ramifications. The impact was seen in three phases. In the first phase, its customers were caught in the cash crunch due to non-availability of legal tender. In the second phase, many of its customers faced loss of income due to either loss of job or were being paid in older currency notes. In the third phase, Ujjivan saw local politicians in many parts of the country asking the public not to repay the loans with a promise that government will waive off the loans. This became a major issue because people started to default. Ujjivan took the help from MFIN, NABARD, SIDBI, RBI, the Chief Secretary and Financial Secretary, and other institutions to send out the correct message to masses that no loans have been waived off. Initially, there were a lot of repayment defaults. Later on, as the credit crunch eased, people started to pay back the loans. The future. Ujjivan started as an SFB or small finance bank on 6th of February 2017. This marks a new chapter in the life of Ujjivan. Ujjivan has embarked on a new journey as a bank to serve the unserved and underserved in a comprehensive way. Overall, the book presents the positive side of Ujjivan. Author interviewed different people from Ujjivan and people outside of Ujjivan as well. The book dishes out a lot of numbers and financial jargons. Hence, one needs to have some knowledge of finance to understand the book. At times, the book gets repetitive. If you're a keen follower of Ujjivan, then you can pick up the book and get insights on Ujjivan as well as the microfinance industry. Else, you can safely ignore the book. This was an abridged version of the review. For a detailed review, please visit investing.amitkirti.com. Thanks for listening. Goodbye till we meet again in our next podcast.